Welcome back, everyone. Happy Friday to Not Your Advisor with NYU Grad. Hope you had a great week. Let's jump right into the last session of the week here. So, looking at breadth, we had 829 new highs versus 144 new lows. Very bullish breadth numbers for the day. Looking at advanced declines, we had 43% of shares advancing versus 53% declining, and we'll get into this a little bit more as we progress. Looking at the 50-day, you had 42% of stocks below its 50 and 33% below its 200-day moving average. The Dow closed up the best, up 125 points or 0.32%. The NASDAQ actually closed down a nickel, 0.03%, not a big deal. And the S&P closed up $8, 0.16%. Looking at the mega caps, you had a mixed bag. I think today you had on the downside, you had Amazon down 1%, Tesla down 2%. Apple and Google were down like 0.8 and 0.7%. Meta was a nothing burger. Microsoft was up 0.59. Nvidia was up 1.27. Now keep in mind, Google was down more than this, but Sam Altman from OpenAI eased some concerns for Google long-term shareholders by saying that their next project release will not be a search engine, easing some of those concerns for Google's search. Let's see what else I wanted to cover here. Just looking at the sectors for the week. So let's first look at the one-day performance. You had consumer defensive up the most, 0.5%. Then you had technology up 0.5%. Financials up 0.38%. Basic materials up 0.17%. Industrials up 0.04%. And healthcare pretty much even. To the downside, you had consumer cyclical, energy, communication services, real estate, and then utilities. But more importantly, when you look at the week's performance, while the markets were broadly green this week, for I believe the third straight week or something like that, if you look at the best performer for the full week, it's not tech. It's not even close. It's utilities, up 3.4% for the week. Number two is not technology either. It's financials, up 2.67. Number three, it's not tech. It's industrials, up 2.47. Number four, it's not tech. It's basic materials, up 2.4%. Number five, it's not tech. It's consumer defensive, up 2.4%. Number six, it's not tech. It's real estate, 1.8%. You get the picture. Tech is almost last behind consumer cyclical. But it was up. Tech was still up 1.3% for the week. So let's keep going. Let's keep peeling this onion, huh? So a little bit of housekeeping. I like to, cover some of the stuff before I deep dive. I am going to be moving some of the show notes, the ones where I kind of rattle off what was weak, what was strong, and some of the hyperlinks out to the macro data like the true unemployment, the Fred data for Indeed job postings. I'm going to move all that stuff up to the free part of the show notes because I want to add value to the free subscribers. I'm sure from the comments that I get as well as the emails I get, you already do get that value, but I want to continue to increase that. So with that said, let's keep going here. There was no volume again. We closed the day with a little bit of a boost in the volume. We closed at 44 million shares traded on the SPY. It's really pathetic. We've been averaging like 40 million shares per day. You would have to, if you go look at this SPY chart here in the show notes, you will see that our volume for the week, those are daily bars, you'd have to go back to Thanksgiving week to see that type of lack of volume. It seems like we're pretty much just waiting for next week's Tuesday and Wednesday data for the PPI, CPI, and Jerome Powell on Wednesday. Looking at the volatility index, we're just trapped in this gigantic wedge from 2020. As you all know who've been following, I am praying with all my might that the VIX goes under $10 into single digits, because I think that's going to be a trade of a lifetime. Kind of like how when oil went negative. But right now, like, hedging is pretty cheap as well. So talk to your advisor, broker, FIA about hedging because it's cheap right now. The next chart here on the show notes is Williams Sonoma. This chart comes the way of MarketSmith, which is Investors Business Daily. I'm just beta testing their chart package right now. Primarily, I'm using Thinkorswim for brokerage, as well as Slope of Hope charts for like watch lists and stuff. But I wanted to show this chart for to make a particular point. So obviously you see Williams Sonoma breaking out here of a long base, basically going from like $140 to over 300. But the point I want to make here is if you go down to the bottom of the chart, you'll see a neat presentation of the past 4 quarters of their EPS growth or decline, as well as their sales numbers growth or decline. If you look at the last 4 quarters for Williams Sonoma, you'll see that their earnings has declined 25%, 19%, 2%, and 1%. Their sales has declined 7%, 13%, 15%, 7%. Now, the reason why I'm showing you all this is if you follow me, I typically will talk mostly about technicals and charts and price location and auction market principles. Obviously, I know how to read a balance sheet. I know how to, decipher a 10K and a 10Q, as well as look at the PowerPoint or slides from the earnings release. The reason I don't focus too much on the quantitative historical data is that once that data is printed digitally, it's already in the stock price. It's already in the chart. And the reason why I'm also bringing this up is I consume a lot of content on the weekends, whether it's on the internet, like on Substack or on X, and other newsletters as well. I'm not going to point out any, but there are a lot of great newsletters out there about finance and stocks. The one thing I want to caution is that if you see someone that is focused strictly on the earnings and like the 10K, 10Q numbers, their, run-of-the-mill data, and they're making decisions on that, just be careful if it's only that, because that's all old news, right? Like, that news is not coming to us, the retail, any quicker than it's going to Wall Street. Like, Wall Street, for the most part, authors all of this, so it's hard to make decisions on data that's already in the chart. And that's why I'm showing this, right? So if you're only looking at fundamentals and you see that their earnings and their revenue is declining here on Williams Sonoma, you may not want to invest, right? Because it's all red. Or you might interpret it as, every earnings call you're listening to it, you're digging through the 10Q, 10K, and you're saying, the rate of which their earnings is declining is slowing down. It was down 25%. Now it's only down 19%. And now it's only down 2%. Now it's only down 1%. They must be accelerating their earnings, right? Like, I get it. That's one way to look at it. But what I'm saying is that data is already in the hands of professional institutional traders. You're not going to win looking at that data. You have to also incorporate technical analysis, sector analysis, forest versus the tree analysis, and breadth analysis, and tie all of it together. So that's my soapbox. Let's keep going here. So what was strong? I'm going to, as I typically do, rattle off some tickers. Now, these are all percents, okay? Do not make me say percent 40 times. Here we go. These are all what was strong. So positive. Sweetgreen, 33.96%. Reddit, 6.82%. Espit, 6.04%. Kura Sushi, 5.42%. ARM Holdings, 5.07%. Kava, 4.9%. Roblox, 3.39%. Smartsheets, 3.1%. Biddy, 3.04%. That is inverse ETF of Bitcoin. SARK, that's short ARK Innovation, up 2.8%. SOX L, that's long semis, 2.68. Datadog, 2.68. Crocs, 2.5. CPNG, 2.23. Extreme Network, 2.17. Broadcom, 2.08. AppLovin, 2.05. What was weak? Let's go. All percents, all to the downside. Marathon Digital, 12.6. Affirm Holdings, 9.2. ACMR Research, 8.5. MicroStrategy, 6.58. Bitfarm, 6.49. BITU, 5.7. Shopify, 5.6. Coinbase, 4.5. New York Community Bank, 3.9. Roku, 3.8. Instacart, 3.19. Wayfair, 3.04. FBTC, 2.95. Carvana, 2.8. iBit, 2.8. ARK Innovation, down 2.8. Natural Gas, 2.7. Paysafe, down 2.75. Palantir, 2.55. UCO, 2.4. Etsy, 2.4. PayPal, 2.3. Rivian, 2.25. Tesla, 2.04. Now, everyone follows different stocks. This is just kind of some sampling of who I follow to just take a quick read on bulls versus bears. I will be posting that on the free section of the show notes. Free members, very important week coming up, especially Tuesday and Wednesday. You could pretty much take Thursday, Friday off. Tuesday morning, you have the PPI data numbers coming out, and Jerome Powell speaks at 10 a.m. On Wednesday, you have the CPI data coming out with retail sales. So there will be heavy volume, is what I'm assuming, on Tuesday and Wednesday next week. Keep watching the Mag 7, keep watching the semiconductors, keep watching the yields, 10-year as well as the 2. I'm going to link the economic data calendar that I use to let you guys know what's coming up next week. The True Up IO tech layoff link will be there. Credit card delinquency rates will be there. The Indeed.com job data will be there, and the true rate of employment or unemployment will also be linked in the show notes. If you can all do me a favor, go to either Spotify or Apple Podcast and click 5 stars for me. I would greatly appreciate it. It would cost you nothing to do. It would support others finding the podcast and Substack. I also have a link to 20% off for annual billing in the show notes, and you can read my testimonials on the testimonials page. Premium members, please stay on so we can go through some charts. Have a great weekend, free members. All right, I hope you guys are having a great Friday and had a good week. We had very light volume, but I still think it's worth doing these charts. So let's get into this. So I had posted on the private chats on Substack a quick summary of why I'm more neutral versus defensive right now. But let me just go through this bullet list of why. So the McClellan Summation Index has turned positive, has crossed up above the 12-day EMA. The SPY VIX ratio chart is now attempting the fourth kiss above, and I'll walk through that in a second. Breadth has improved to the upside. We've had almost 7 sessions now where new highs have beat new lows by a lot. This is more of a mixed bag. You had 4 out of the Mag 7, as well as the semiconductor group, above the 50-day moving average. However, you have Microsoft, Meta, and Tesla still under the 50-day moving average. So that's not great, but let's keep going. Yields came down, but we're still kind of hovering in that 4.4, 4.5 range. So the jury is still out there as well. So with all of the evidence, it's hard to be super bearish. But with all the evidence, it's hard to be super bullish. So I'm taking a very neutral stance. I'm nibbling and picking very low beta things like silver, right? Like Amazon potentially, or things that I can get out of pretty quickly and in small size. Next week, I think it's going to be very volatile. I don't believe the VIX is going to go to zero like oil went negative. Maybe we break down the wedge and go a little bit further south. Maybe we get to $9.99 or a 9 handle on the VIX. But I think sooner or later, the volatility index is going to spike. So keep watching that. So let me walk through the SPY VIX ratio chart for those that are new members. And I'll try to go through this quick so I don't bore the long-time members. So the first chart in the premium show notes is the SPY VIX ratio chart. It goes back to 1990. If you've never seen a ratio chart, it's basically like US dollar yen or US dollar the British pound. Like when you go and travel to London or travel to Japan, and you say, "Oh wow, the US dollar is so strong versus the yen. I can go buy a Rolex watch." Or "Oh why is the food so cheap?" Right? Not only is it inflation, but inflationary for them, and our money is more expensive than their money. But it's just basically a ratio chart. You divide the S&P by the VIX, and you can see here between the dot-com boom bust, the housing great financial crisis, and what we're in now, which is kind of the everything bubble, in that entire time frame since the 1990s, we've only touched or gotten close to this upper trend line 4 times. The first time, if you look at this close-up chart, and each time that we kissed that line, going all the way south to 25, it took about 23 to like 28 months. And within the show notes, you'll see a close-up of the first kiss. It actually never got there. We got very, very close, and then we rolled over. The second kiss, we actually kissed it twice, but we almost kissed it like 5 times, and then we rolled over. The third time, same thing. We skated near it. We tried to kiss it like 3 or 4 or 5 times, and then we actually pierced through it a few bucks, and then we rolled over. And now we're getting close to the 4th kiss. We've been skating right next to that trend line, and we've tried to kiss it like maybe 6, 7, 8 times, but we never got there. And then we rolled over, and I said, hey, we might have already kissed it. We have to see if the S&P 500 will find support at the 100-day or we break below it. And if we break below the 100-day moving average, I'm going to call it and say we kissed it even though we actually didn't kiss it. And then we furiously rallied here, so we might be making that attempt. So keep watching this. We may overshoot like the third time for a few sessions and then roll over, or we might just keep skating near it for a little while. So this is where the art and science comes in. You kind of have to interpret the data, interpret the chart. Gosh, I sound like Jerome Powell. So how did the S&P 500 perform for each of these kisses? The first one, exact same time period, was down 47% from peak to trough. The second kiss was down 51% peak to trough. And the third one was actually not a kiss. Actually, it was, yeah. So it was down 26%. But keep in mind, the third kiss encompass the what am I trying to say here? Um, it includes the COVID lockdown of 2020, right? So if COVID never happened, I'm not really sure what would have happened, but it did. And once COVID lockdown started, we almost got to the reading of 25. We stopped short at like 28 with all of the stimulus, and then we V bottomed, as you can see. And now we're approaching the fourth kiss. So again, this chart is undefeated. Each time that it has kissed that trend line on top, we've marched for like 24 months afterwards, all the way to 25 reading. Now, keep in mind, this can get higher if the S&P rises or the VIX falls, and it can go to 25 if the S&P falls and the VIX rises. So this is a very important long-term indicator that I use, including the McClellan Summation Index. So I just wanted to walk through that real quick for new subscribers on Premium. Let's go through some charts here. So let me just, actually I'm out of water. All right, so I'm just gonna have to do this with parched mouth here. So Bitcoin, we're back at the $60,000 level. If we break 60,000, we might break that near-term low and go south. So very important support level here for Bitcoin. Apple, we are above the 200-day moving average. We gapped higher, obviously, on all of that buyback news. Let's see if we can stick the landing and stay above the 200-day. Amazon, we did not break out to new lifetime highs of, like, I drew that horizontal at 189.77. We were down 1% today, but still not a big deal. I think it's just literally sitting and waiting for more information. Google, as I mentioned, while they're back up, a lot of the data and their earnings and their dividend news is being sold off. Let's see what happens. Meta, I'm so glad I did not stay in this. We're under the 50-day moving average, and it has some work to do here. I mean, we'll see what happens when it gets back to the 50-day moving average. Microsoft, we're right at the 50-day moving average. No new positions here, nothing to do. There's no price structure here. NVIDIA, we're above the 50-day. We're kind of just, I don't know, flatlining or just pausing here. They report on May 22nd. Tesla, we are back below the 50-day moving average after all of that China robo-taxi news. I think Tesla is a broken stock. But that's just me. All right, let's get into some of these positive charts that were best defended during the previous sell-off that just happened. Abercrombie and Fitch above the 50-day. There's no price structure to play here other than going really aggressive if you were that type once it breaks above 140. AppLovin has done nothing wrong. It's above the 50. It's breaking out to new highs. And if you got in at $45 when I told you all that it was breaking out of a balance area, you're up double your money. American Express, we are now breaking up into lifetime highs. I had that horizontal of $240 and 55 cents. If you want something that's safe, that's just bulletproof, short term, AXP is it. Kava, they IPO last year. Their Greek quick serve restaurant like Chipotle Mexican Grill. They are breaking out again. If you got in at 71.60 to break out to lifetime highs, that was the only entry I saw. There was no real healthy structure here. The healthy structure was to break out at like $38. Chipotle Mexican Grill, we broke out of the balance area at 3,000, and we're now creating another balance area up there near 3,200 to 3,280. Keep in mind they're going to do a reverse stock split of 50-1, so you divide by 50 in June. It's just optics. This is a new ticker that I saw, COPX, copper ETF. It had a beautiful balance area here. I missed this because I haven't been watching this, but from November or December of last year to now, it was carving out in March a beautiful balance area, and it broke out. It's kind of too late, but I'm just showing you guys to put on your watch list. This looks very bullish. CPNG, the South Korean Amazon, it has not broken out of this little flag. It actually broke down, and now it's trying to go higher. There's no trade here until it can get past $23.40. Dell, it is starting to break out of its balance area here, so take a look at Dell if you want something safe to park your money. But again, tight stops. But Dell has always been a leading stock, and even during the pullback of the general market, it was defended. It never went under the 50-day moving average. GLD, just look at this chart. It's just very bullish. There's a base within a base. It was up only marginally, up 0.83% today, but keep in mind, everyone's talking about it now, right? Even I'm talking about it, like gold and silver. So there might be a small pullback or pause, because when things get too popular, Wall Street likes to sell into that to shake out loose hands. GLD, same thing. It broke out of its its base. If it breaks up, it's just going to keep going higher. Silver, I posted on the Substack chat that this is not only a cup and handle from 2012, but it's also a 44-year cup and handle pattern, if you believe in cup and handle patterns. We haven't broken out yet of $27.39, but it looks like it's just a matter of time, unless the dollar skyrockets. Morgan Stanley is another one that I noticed on the financial sector. This is breaking out of its balance area. So take a look at MS if you want to be in financials. I have a few more. Let's keep going. The next one is going to be Royal Gold. RGLD has a balance area. It's still within it. Above 130 would be the breakout of this balance area. Ticker symbol RGLD. SCCO, Southern Copper. This is a nice, pretty chart that I found just by searching on for copper stocks. It has a few balance areas here. I didn't even draw in all of them, but I drew in 4, and we're right at the upper end of this small balance area. If we break above 120, this is going to keep going higher. But watch how copper is acting. I did a long-term chart from 2020 as well as a close-up chart from Christmas, and we're sitting right at the upper end of that balance area. Silvercorp Metals, SVM, we're getting closer to that upper part of that balance area. So we're either going to break up and test the green trend line, or we're going to go south. So this is one to watch. I don't have a position. It's just on my list, SVM. Wells Fargo, look at this beautiful chart. If you want something safe that will always get bailed out, that pays a dividend, I know it's investing in evil banks, but just look at this chart. You have defined 4 balance areas here, and it's breaking out of the recent one at like $62. If you want to park your money, collect a dividend in a safe bank stock, and if interest rates fall or if they cut rates, that's going to help banks like Wells Fargo. So out of all of the things I talk about today, if you just want a safety stock that pays a dividend, barring like some crazy news about fraud or jail or CEO or cooking the books, outside of anything like that, I think Wells Fargo out of this group is the safest place to park your money for now of these listed. Wingstop, Again, I don't understand how this company can do so well, but it broke out of the balance area. It's well above the 50, well above the 21-day EMA. Nothing to do right now, but it's just performing really well. Wheat and precious metals, it was down 1.66% today, but beautiful breakout. If you caught this right at $38, nothing to worry about here. If you caught the breakout at $51, nothing to worry about here. I'm in at like 52 and change right now, so I'm watching it closely. But again, it's a little bit overbought. We might see a little bit of a pullback or a pause on gold and silver. XLE, which is the energy ETF. I mean, look at how many times XLE has been defended at the 50-day moving average. And as time passes on, the 50-day moving average is going to continue to go higher as the price stays above it. So we may start to see XLE rise with crude oil. Looking at ExxonMobil, I know some of you are in this, but look at this. I said we broke out of the balance area. We back tested it. Be careful if you're still in it. Do not let this go below the 50-day moving average, and look at where it's defended, right there at the 50-day moving average and the back test of the balance area. So if oil and energy starts to rise, which is my thesis, then ExxonMobil is going to go higher. And the last chart is CL, or crude oil. Crude oil itself is kind of just waffling here, to be quite honest, between the $70 and $90 range. It's literally, if you follow me, you know, it's in the middle of the range, which is going to be like a magnet, because that's where most of the time and most of the volume has occurred for that asset. So it acts as a magnet. So right now, there's really no trade on crude oil. I would wait. If you're a crude oil trader, you know more than I. But there's no edge here. It really needs to be closer to 90 or 70 to put on a trade in my eyes. But that's all I have for today on Friday. Have a great weekend. I'm gonna go and watch the New York Knicks on television. And enjoy some dinner and some wine and my dog and my wife. I will see you all after the Monday session. Have a great weekend. All right, later.